Banking, Housing, and Urban Affairs Committee will come to order. When consumers send money through an app or send a check in the mail, they're supposed to be able to trust that financial companies are protecting their money and will help them if something goes wrong. Yet that's not what we see. Scammers, fraudsters have ramped up their efforts to take people's money. Banks and payment apps have stood on the sidelines while the problem has only gotten worse. Pretty much everyone's either been scammed or knows someone who's been scammed when trying to use a financial service. Today, one of the most popular ways people send money is through so-called peer-to-peer apps like PayPal, Venmo, Cash App, and Zelle. These apps are now part of most Americans' day-to-day lives. 75% of adults have used at least one of them. 40% of Americans report using them at least once a month. Where consumers see convenience and accessibility, scammers see an opportunity. 2022, one major app had more than $100 million in, quote, unauthorized transactions. Another had 60 million. It's not just new technology or payment methods, of course, that scammers target. Check fraud is as old as our banking system. They'll steal a check from the mail. They'll use chemicals to wash off the key details, then fill it in with the details they want and deposit it. You might think that more people using apps would make checks less of a target, but it seems to be the opposite. Check fraud is getting worse, too. Last year, the Financial Crimes Enforcement Network noticed a rise in check fraud so drastic that they issued a public alert. My colleagues and I wrote to the American Bankers Association expressing concerns on the issue. They created an information directory providing contact information for banks to resolve check fraud claims. By the end of 2022, depository institutions had reported more than 500,000 incidents of check fraud, more than double the year before. And scammers broke their record again in 2023. So the evidence is clearly shows it's getting worse. Same goes for wire transfers. Scammers target wire transfers because they can steal a larger proportion of customers' savings through wire transfers. Americans will often use wire transfers when they want to send large amounts of money, like when buying a house. Imagine a family in the process of buying a home, juggling all the details of the process, along with the excitement that they have of reaching a major life milestone. On top of everything else they have to worry about, they have to defend against scammers posing as a real estate agent or title company targeting the family's down payment. In 2023, customers lost at least $270 million to wire fraud. Now we're faced with the possibility that artificial intelligence could make these problems worse. One example, scammers can now use AI to clone a person's voice to bypass a voice authentication procedure. Banks, payment apps, other financial institutions are not doing nearly enough to prepare for the threat AI poses in increasing the scale and the impact of scams. All these problems with scams are rampant. In Dublin, Ohio, a suburb of Columbus, a retired FBI agent wrote a check for less than $200. Someone stole that check from a mailbox right in front of a post office, changed the number to $8,590 and cashed it. In another case, a 17-year-old student in Ohio received an acceptance letter from her dream college. Someone posing as another admitted student reached out and scammed her out of almost $3,000 of her own money through Zelle. That $3,000 was 3/4 of the college money she had saved by working at a discount drugstore. None of this mattered to the bank. As far as the bank was concerned, this young woman was responsible for the money and additional fees for depositing bad checks. In the end, she got her money back, but only after the efforts of a very tenacious mother who tracked down the local executive of the bank. No one should have to go through these links because banks, payment apps, and other financial institutions can get their acts together to protect their customers. When these incidents happen, people lose their hard-earned money. They're often made to feel ashamed and embarrassed. No one ever tells the victim of a holdup or break-in at their home that they were stupid or should have known better than to be robbed. But that's exactly what consumers who are scammed too often hear. Be clear, being scammed has nothing to do with savviness or intelligence or education. Just last year, a retired White House scientist was scammed out of $650,000 of her retirement savings. These scams are organized. They sent her a pop-up message on her computer. They rerouted a phone call she meant for her bank. They kept her on the phone for days on end. She still wonders about what she could have done differently, but no one should have to think about that question. To be clear, the answer to these types of stories isn't to warn people to be better prepared or put millions of consumers through a so-called financial education course. Of course, we all need better financial education, but that's not the backstop for all this. Americans don't have the time for that. They have jobs and kids and bills to worry about. It's not on them. It's on the companies that allow the scam. People should be able to have an expectation that their money is safe when they have a reputable bank. People lose their money because payment apps and banks don't put enough measures in place to protect their customers. For example, among the peer-to-peer companies, Cash App refunded just 16% of unauthorized transactions in calendar year 2022, just $1 out of $6. Zelle claims they reimburse consumers who have been victims of imposter schemes, but their website states that since the customer authorized the payment, you may not be able to get your money back. It's unclear whether Zelle will actually reimburse victims of imposter scams. They need to clarify instead their reimbursement policy. These companies need to step up. They apparently need rules to make them do it, not more financial education. These banks, payment apps, and other financial services companies have shown us they need, shall we say, some encouragement. CFPB has a proposed rule that is one strong first step. It would help ensure that companies like Venmo and Cash App and Zelle follow federal consumer protection laws. It's what CFPB does, protect consumers and their hard-earned money. When the CFPB is empowered, it ensures that the financial system works for consumers, not just big companies. With millions of users, it only makes sense that these companies do more to protect consumers' money. Because as we've seen in other hearings in the last 3 years, frauds and scams are not unique in consumer finance. They're also common within cryptocurrency. We'll keep pushing to make our financial system safer, whether it's stopping random fraud and rampant fraud and scams in cryptocurrency or in apps and check fraud. I hope we can discuss more today about how banks and payment apps and other financial service companies can step up for their consumers and actually earn their trust back. Senator Scott.
Thank you, Mr. Chairman. I'll start off by saying I guess Steven Spielberg was on to something when he named the movie Catch You If You Can. Recently, I saw a movie called The Beekeeper, which starts off about financial scams that led to the grandmother's suicide. Now, financial scams may not today lead to suicides, but without any question, it certainly kills your hopes, your dreams, and your sense of financial security. The impact of financial scams, especially on our senior citizens, is undeniable. Having been the ranking member on the Aging Committee, we've had many, many hearings about the devastation of retirement savings lost, lives changed, grandmothers looking for a place to call home, moving back in with their kids or their grandkids. The devastation is so real and so often goes unreported in some instances, and certainly the investigations leave many wanting. Even in a largely digital age, more traditional forms of fraud continue to flourish. Think about the fact that whether it's check fraud, wire fraud, mail fraud, we've seen a resurgence of criminal activity in these spaces, in addition to, of course, the new types of fraud that comes along with the technological advancements that we've seen around our country and certainly the innovations around the world. Not only do I think of my own mother, who celebrates her birthday this weekend as a senior citizen, I think about every single South Carolinian who trusts that their money is safe when they write a check and place it in the mail or transfer money to their grandkids. Mr. Benda, I thank you for bringing your expertise and talking about the different kinds of fraud that can impact American consumers. Protecting consumers and preventing fraud are critical pillars of our financial system and, frankly, what our society deserves. For many families, becoming a victim to these scams is equivalent to wiping out a lifetime of savings. And not just the dollars in the account, but the thought that you are no longer safe to transact business anywhere, in any form. For many, it's the worry that their identity is compromised, that their credit score is impacted, and that they struggle to realize just how will they survive and afford, whether it's their rent, a mortgage, or even simply groceries. which in today's inflationary economy is even harder than it was before. Speaking of dollars, let's just count the cost. $9 billion in 2022 is the cost of financial fraud, a staggering number. Unfortunately, these criminal acts of fraud and theft are not new, and criminals like these continue to prey on the vulnerable. This is precisely why our financial institutions and financial industry participants should and do spend billions of dollars developing and implementing innovative technologies to strengthen security that will protect families and businesses from fraud. But on the other side of the coin, we haven't seen the same commitment from our federal regulators. Recently, our regulators seem to be more focused on political grandstanding than promoting innovative solutions, protecting consumers, and increasing efforts that support financial education. And instead of focusing on real crimes and holding criminals responsible, this administration seems intent on tying up financial institutions with ever-increasing amounts of Washington red tape. Recently, the CFPB has continued its deceptively named junk fee campaign targeting legitimate, contractually agreed upon payment incentives. In its latest proposals, the CFPB uses legal gymnastics to turn penalty fees into loans while slapping the label abusive on any practice it just doesn't like. The CFPB is sending a clear message. It is willing to stretch the law beyond its limits to suit Director Chopra's political agenda. And every dollar spent navigating Washington red tape is a dollar less on initiatives that actually help families and protect businesses. It's a dollar less for bolstering a firm's cyber defenses in the investment world that may prevent or even catch fraud before it happens. Unfounded bureaucratic regulations take resources away from financial innovation and education, both of which can help lift up the underserved and minority communities. What concerns me even more than all of this is recent allegations that suggest the federal law enforcement and financial regulators may be expending their resources to target Americans for their political and religious beliefs. Instead of targeting Americans for purchasing Bibles or shopping at the Bass Pro Shops, our government should focus on doing its job, protecting our families and prosecuting actual criminals, including those behind financial scams. Unfortunately, these examples are part of a larger trend we have seen from this administration of putting politics first. For example, banking regulators were so focused on climate change that they failed to identify the key risk factors leading to the second, third, and fourth largest bank failures in our nation's history last spring. And again, the CFPB wasn't so focused on building a public pressure campaign against so-called junk fees, maybe it could do its job and actually protect consumers from the real harm that comes from being a victim of financial crime. One of the best tools any of us have to fight back against financial crimes is to become better educated, both about the financial products and protections that are available to us and about scams and methods criminals are using against us. In fact, I have long championed the idea that financial education or financial literacy is one of the most important and most critical tools for climbing the ladder of success in America. It's why I've worked so hard to incorporate financial literacy in my work on this committee. And financial literacy is a core pillar of two of my initiatives, the Road to Housing and Capital Markets Framework. And I was so proud to work across the aisle with Senator Reid last spring to pass a resolution declaring April Financial Literacy Month. As we discuss the very real issues of financial fraud and crime, we must take a holistic approach. Our financial institutions must do their part to protect, to serve, and educate customers. And our regulators must do their job and implement the law Congresses enact, not their political wish list. We must all work together to gain a better understanding of the options before us so that we are able to best serve our community, our constituents, and our nation. I look forward to hearing from each of the three witnesses.
Thank you, Senator Scott. I'll introduce the witnesses. Ms. Carla Sanchez-Adams, Senior Attorney, National Consumer Law Center. She focuses on banking and payment systems, Fintech, and high-cost lending. Welcome, Ms. Sanchez-Adams. Mr. Paul Benda is Executive Vice President of Risk, Fraud, and Cybersecurity with the American Bankers Association. Mr. Benda, welcome. Mr. John Breyault is the Vice President for Public Policy for Telecommunications and Fraud for the National Consumers League. Welcome, Mr. Breyault. Ms. Sanchez-Adams, please begin.
Chairman Brown, Ranking Member Scott, and members of the committee, thank you for this opportunity to testify on behalf of the National Consumer Law Center's low-income clients. Payment fraud is everywhere and impacts all Americans, even members of Congress. In fact, if you do a Google search to how to address payment fraud, you'll get 491 million responses. However, the impacts of payment fraud are keenly felt by certain low-income communities, older Americans, and communities of color. These communities who are already struggling and often pushed out of the traditional banking system can least afford to lose money due to payment fraud and errors. Fraud is also occurring over all types of payment methods, as you heard earlier. Bank-to-bank wire transfers, checks that now can be done online and through mobile and digital applications. And fraudsters exploit the ease of these newer technologies as well. As you heard, they spoof phone numbers from real financial institutions. They utilize deep fakes, psychological manipulation, and even use force and threats of violence to get consumers to initiate transactions. Payment fraud can be sorted into two buckets: unauthorized and fraudulently induced. The unauthorized bucket is the one that fraudsters initiate without the consumer's authority. The fraudulently induced bucket is the one that the consumer initiates a transaction, but only does so as a result of a fraudulent scheme involving deception and manipulation by the fraudster. Now, consumers are impacted by both, but the responses that they receive will depend on the type. Currently, if you're a victim of payment fraud, your only hope of getting your money back is if it happened through an unauthorized electronic funds transfer. And that's because of the strong protections of the Electronic Funds Transfer Act, or the EFTA. However, even if you're in this unauthorized bucket, if it happens through bank-to-bank wire transfer, through check fraud, forgery, or alteration, through the theft of an electronic benefits transfer card, then you're going to face an uphill battle in trying to get your money back. And that's because these are excluded from the EFTA. And if you find yourself over here, your story fits into the fraudulently induced bucket, you are going to hear, too bad, so sad, because there are no clear protections currently under federal or state law. But there are steps that we can collaboratively take to keep impacts of fraud to a minimum on both financial institutions and consumers, and to incentivize more effective use of innovation to prevent payment fraud. First, we absolutely cannot push the entire burden of payment fraud onto consumers, hoping that financial education will solve it. It's important, but it's not key. Second, we need to update antiquated laws that offer little to no protection to consumers who have been impacted by payment fraud. In this day and age where the vast majority of transactions happen online or through mobile and digital technologies, it makes no sense that only some of these transactions are covered by the EFTA while others are not. Wire transfers and EBT cards and maybe even checks should have the protection of the EFTA. As well, fraudulently induced transactions should have protections under the EFTA. Third, receiving institutions should bear more responsibility. Currently in the US, there is no mandate that institutions who allow fraudsters and money mules to open an account and to receive fraudulently induced payments reimburse the consumer or the consumer's institution. They have Bank Secrecy Act obligations to make sure that their customers are not engaging in unlawful activity, including payment fraud, but they don't have any monetary incentive to make sure that they can effectively prevent their own customers from committing fraud. Conversely, in the UK, they've mandated reimbursement for fraudulently induced victims, with the consumer's institution and the receiving institution splitting the cost 50-50. Now, if we did that here and the receiving institution were obligated to pay 50%, you could believe that they would be doing more to prevent their own customers from committing fraud. And they should bear the cost because they're allowing this to happen. Fourth, any attempts to combat fraud must also be coupled with policies and procedures that protect innocent consumers who have not engaged in payment fraud, but who may have had their accounts frozen or their accounts closed due to overly aggressive fraud monitoring. They must have the ability to dispute the freeze or the closure, to expect the money that they need to eat or pay rent to be returned in a timely manner, no longer than the 10 days provided under the EFTA. Fifth, the financial institutions that design and run these payment systems need to take more responsibility for making these systems safe. It's in their financial interest to do so. Confidence and use of these systems will increase as they contemplate consumer protections when deciding things like safety features, speed bumps, how much fraud screening to employ, and whether to sacrifice safety for convenience. Finally, we need to share more information about fraud, how it's happening, through what payment systems, and who's doing it. We need interagency cooperation on the federal and local level, combined with input from financial institutions, trade associations, consumer advocacy groups, and other stakeholders. Thank you, and I'm happy to take any questions.
Thank you very much, Mr. Benda. Welcome.
Thank you, Chairman Brown, Ranking Member Scott, and members of the committee. I appreciate the opportunity to testify today before you. My name is Paul Benda. I serve as the Executive Vice President for Risk, Fraud, and Cybersecurity for the American Bankers Association. Before joining the ABA, I had the honor of serving in the Air Force and worked at both the Pentagon and Department of Homeland Security in leading roles to enhance both physical and cybersecurity. I'm an engineer by training and try to apply those skills to help our members navigate a range of operational challenges, including fraud. Our members know that fraud takes a financial and emotional toll on their customers, and banks of all sizes are taking extraordinary efforts to protect and safeguard customer accounts as fraud has become more sophisticated. Today's fraudsters are using artificial intelligence and modern tools to scam customers and small businesses out of their money. Banks have a long history of innovating to protect their customers, and ABA is doing what we can to support our members in this fight. In the last year, for example, we launched a new industry platform to make it easier for banks to resolve check fraud claims. We are also developing a new information sharing tool that we believe will make it easier to spot financial fraud. Unfortunately, however, the fight against these criminals is one that the banking industry cannot win on its own. We believe that a unified, cooperative effort between banks, law enforcement, regulators, and other stakeholders offers us the best chance to fight back against fraud and protect consumers. There is no doubt that bank customer scams and fraud have been increasing. According to a recent FBI report, there was a 50% increase in reported fraud losses from 2021 to 2022. The top 3 categories of fraud were investment scams, business email compromises, and technical support scams. Impersonation is a common factor in nearly all of these scams, with the criminals often impersonating a bank and asking the customer for critical financial information. Also worrisome is the rise of check fraud, which has become one of the fastest growing categories of consumer fraud across the country, even as the use of checks continues to decline. In response to the growing fraud threat, banks are deploying new tools and capabilities to identify suspected fraud and stop it from happening in the first place. Still, there are limits to what banks can do when checks get stolen or when sophisticated criminals scam customers into giving them their money. Here are some of the ways other stakeholders can help us in this fight. As detailed in my written testimony, our members believe that there are 4 pillars that will enhance our anti-fraud efforts. First, increase consumer education. The best way to reduce fraud is to prevent it from happening in the first place, and the best way to do that is empower consumers to protect themselves. One of ABA's most important consumer protection initiatives is our award-winning Banks Never Ask That campaign. Through social media, TV ads, and even stadium scoreboards, we've educated millions of bank customers on how to spot common scams from criminals posing as their bank. The point is to drive home the message that a bank will never ask for your password, PIN, or social security number, but a scammer will. To date, more than 2,300 banks have participated in the campaign using creative content provided by ABA entirely free. Separately, our Safe Banking for Seniors program also provides banks and consumers with free tools and tips on how to spot and avoid elder financial abuse. We think there are opportunities to expand this kind of consumer education. Second, close regulatory loopholes to stop impersonation scams. Telephone number spoofing is a major problem. Criminals have been able to misrepresent themselves either through a spoofed caller ID that shows a legitimate business name or phone number, or through stolen social media accounts that are indistinguishable from real accounts. ABA has supported the FCC's efforts to protect consumers from illegally spoofed robocalls and the need to have effective authentication requirements for calls and texts. We have also weighed in strongly on the need to hold any telecommunication provider accountable that knowingly allows criminals to impersonate legitimate numbers and company names. Third, improved information sharing. The banking sector works closely with law enforcement and the regulatory agencies and are always looking to develop new ways to share and act on critical threat information. At the same time, the regulators should exercise care in developing new regulations that could inhibit or impede banks' anti-fraud efforts. Fourth, enhance collaboration with law enforcement and regulators. ABA has a long and proud history of partnering with law enforcement and the public sector on outreach activities. We work closely with the FBI, the Secret Service, and Treasury, and in recent months, we launched a new initiative with the U.S. Postal Inspection Service to combat check fraud. We still believe there are additional opportunities for public-private partnerships in support of fraud prevention. In conclusion, banks are working every day to protect their customers from fraud by investing in new technologies, deploying public education campaigns, and partnering with law enforcement and other federal agencies. We all recognize that more must be done, however, if we are really going to crack down on the criminals. It will take a partnership with banks and telecom firms, technology companies, and the public sector all working together. ABA and our member banks stand ready to work with all stakeholders to win the fight against fraud and protect consumers. Thank you again for the chance to testify, and I look forward to answering your questions.
Thank you. Mr. Breyault, welcome.
Good morning, Chairman Brown, Ranking Member Scott, and members of the committee. My name is John Breyault, and I'm the Vice President of Public Policy, Telecommunications and Fraud at the National Consumers League. For more than 25 years, NCL has worked via our fraud.org campaign to educate consumers about the warning signs of fraud and promote public policies that protect the American public from scams of all kinds. There is an epidemic of fraud and identity theft in the United States. Since hitting a record of 5.96 million in 2021 during the height of the COVID-19 pandemic, consumer complaints to the Federal Trade Commission have remained exceptionally high. Fraud losses have continued to mount, increasing from $3.3 billion in 2020 to a staggering $8.8 billion in 2022. Median fraud losses more than doubled during that period, from $311 to $650. And as you mentioned, Mr. Chairman, these losses can often be life savings, a lifetime of work that has been that consumers have built up that is lost to scams. When NCL last testified before this committee in 2021, we warned that peer-to-peer or P2P payment platforms such as Zelle, Venmo, Cash App, and others have become a payment method of choice for scammers. Unfortunately, the problem has only worsened since then. In 2020, the FTC received 62,000 complaints where payment apps were the method of payment, with total reported losses of $87 million. By 2022, reported losses from fraud involving these apps had grown to $163 million. We anticipate that when the FTC reports its 2023 data, this regrettable trend will only continue. The situation is similarly dismal when it comes to fraud involving one of scammers' other favorite payment methods, gift cards. In 2020, the FTC received more than 43,000 complaints where a gift card was the method of payment, with reported losses of $124 million. In 2022, complaints rose to 48,800, with losses nearly doubling to $228 million. Just this week, NCL itself was targeted by scammers who tried to get our staff to purchase gift cards by impersonating our CEO. As bad as those numbers are, the harm from scammers using cryptocurrency as a payment method is even worse. Since the FTC first began reporting it as a payment method in 2020, losses involving cryptocurrency payments have ballooned from $129 million to $1.59 billion in 2022, a tenfold increase in just 2 years. Complaints received at NCL's fraud.org website last year were littered with references to fraudulent cryptocurrency investment schemes, and such scams were by far the costliest type of fraud for their victims. We are not winning the fight against fraud, and we need Congress to act. While P2P platforms, banks, and cryptocurrency trading platforms profit from an ever-increasing transaction volumes, they bear little of the costs of fraud that occur on their systems. Instead, the liability for fraud falls on those who can least afford to absorb the losses, individual consumers. No amount of voluntary consumer education, better disclosure, or friction put into payment flows will solve this problem. We believe the payment platforms where fraud occurs must have a bigger financial incentive to stop scams before they happen. By spreading risk across all the participants in the system, the cost can be better absorbed, resulting in a safer and more secure payments marketplace for everyone. Congress can and should play a leading role in creating these incentives and preventing fraud on P2P platforms and gift cards. We urge Congress to give special priority to passing legislation, such as the Protecting Consumers from Payment Scams Act, which would expand EFTA's definition of unauthorized electronic fund transfer to cover fraudulently induced payments. As my colleague Ms. Sanchez-Adams mentioned, the United Kingdom recently enacted a new law that shifts liability for fraudulently induced payments from consumer victims onto the issuing and receiving banks. We believe the UK is a model for US regulation in this area. Cryptocurrency will soon become, and by some estimates already is, the payment method of choice for criminal scammers. The proliferation of cryptocurrency kiosks in relatively insecure retail locations has made them a favorite tool of scammers. By one estimate, there are more than 34,000 of these kiosks across the country. Kiosk operators, one of whom was reportedly making a 20% commission on every transaction, lack sufficient incentives to crack down on these scams. Senator Warren's Digital Asset Anti-Money Laundering Act of 2023 includes many needed protections and would do much to begin cracking down on the use of cryptocurrency as a payment method. Her bill has NCL's full support, and we urge the committee to approve it. In conclusion, I would like to thank you, Chairman Brown and Ranking Member Scott, for your continuing work to protect consumers and for holding this hearing. On behalf of the National Consumers League, thank you for including the consumer perspective as you consider these important issues.
Thank you. The question will begin with Senator Tester of Montana.
Thank you, Mr. Chairman. I want to thank you and the ranking member for holding this hearing, and I want to thank the panelists for their testimony. I appreciate it very, very much. I don't think anybody is immune from consumer fraud. I certainly have experienced it personally at a time when I was very young and could least afford it. Montanans reach out to me literally daily about these problems. Constituents have paid for services online and that they never receive, or bad actors overseas claiming that something that really doesn't exist. And luckily, we were able to connect them with the FBI or other resources. But these are tough times for people to go through. There's no doubt about it. When they have to call my office, it shows in what kind of, quite frankly, difficult times those really are and the desperation that they have. We need to be proactive, and we all need to be on the same page. I think all the stakeholders need to bear some responsibility for what goes on here. Mr. Benda, you mentioned bipartisan efforts. We've taken in the Senate Appropriations Committee to facilitate public-private partnership to prevent fraud and supporting law enforcement to combat these people that are probably the lowest forms of life on earth. So, Mr. Benda, are there additional tools that law enforcement could use right now that's, that we should be looking at?
Thank you for the question, Senator. I think information sharing is going to be the key to help defeat this. I think when you look at the lack of coordination that we've got on fighting fraud, whether it's the FBI, whether it's reporting to the FTC, whether it's reporting to regulators, whether it's reporting to the U.S. Secret Service, it's fragmented. And so it's difficult to spot trends. It's difficult to spot where these people are targeting. It's difficult for banks to get ahead of it. And so I strongly recommend, or strongly appreciate the language that was in that appropriations report. We think coordination amongst both law enforcement and private entities is going to be key there.
One of the things that has always, quite frankly, amazed me is when a credit card number is used somewhere else and the bank makes me aware of it very quickly. I give an example, and I've given it before. 2 hoverboards were bought in Cleveland, Ohio on my credit card. And it takes two hoverboards for me, so it made sense. And the bank called me up immediately and said, "Have you been in Cleveland, Ohio?" And they took care of it, and I appreciate that, and I want to pass that along because sometimes we go somewhere and make a charge, and they'll call us up and say, "Are you in Spokane, Washington? Is this really legal?" So I appreciate that. Senator Haggerty and I have a piece of legislation with other folks on this committee, the Financial Exploitation Prevention Act, which would help folks lose their retirement funds, money to scam. Look, as I see this from this perch, I think the people, and I'd like to get a comment on this actually, the people most vulnerable are young people and old people. Does that tend to be true? Ms. Sanchez?
Yes, sir. You generally think it's older Americans. They lose the most amount of money, the older Americans do, but the ones that are victimized the most are younger Americans.
Okay, that's good to know. Well, with this bill that we have with Senator Haggerty, it looks to prevent fraudulent activity because it's increased over years. And so, it allows the account holder, the company to delay payments if they think fraud is going on. Mr. Benda, I think it's a really good bill, not just because I'm carrying it and Haggerty's carrying it, but I think it could help. Wouldn't absolutely solve all the problems, but I think it could help. Would there be other actions you'd like to see be done by this committee or other committees to help you do your job?
I'm sorry to sound like a broken record, Senator, but it really is the information sharing piece. And the example I like to give is the sharing of the scam reported data that the telecoms receive. Banks would like to analyze that data, look at that data, and then reach out and shut down those links and those phone numbers so they don't work, so consumers can't reach them. Right now, we don't necessarily get access to that data.
So one of the things, and I'm going to just close out with this, one of the things that has me worried is AI. You talked about customers and small businesses being scammed. And quite honestly, AI is going to start playing in this, and hopefully we can use AI to our advantage on the other side to prevent it. But regular people, myself included, don't understand AI, period. And it's going to take a lot of working together to make sure that we don't end up in a worse situation we are right now, because you can damn well bet the bad guys are going to use every method they can to try to rip people off of money because they don't even know how to get their hands dirty to make money in the first place. So thank you.
And Senator Tester, your experience notwithstanding, Cleveland is a great place to live.
It's a harder. I hear it's a harder rock and roll.
And other things.
I'll direct my first question to Senator Tester and the hoverboard. Having been on for 7 seconds, sir, are you sure you didn't order either one of those hoverboards?
I wouldn't know how to ride one of those doggone things if I had one, much less two at a time.
Well, that's why you remain healthy. Those things are crazy. Anyways, thank you for the comic relief there, Senator Tester. We needed that. Yes, sir. As I've emphasized in my opening statement, financial fraud and bad actors are not new. Check fraud, for instance, has been around, from my perspective, forever, since we've had checks, it seems like. And yet, surprisingly, despite many of the technological advancements that we've seen in the financial industry, check fraud incidents nearly doubled from 2021 to 2022, and is on pace to increase even more in 2023. Mr. Benda, can you please explain how the majority of check fraud is being conducted today and who check fraud impacts the most?
Thank you for the question, Ranking Member Scott. So check fraud is a big challenge for us today, and really it impacts Americans of all types. The challenge we've got is, and it started with the fact that the mail system isn't nearly as secure as we thought. So we're seeing a huge increase in the theft of mail. We're seeing mail carriers being assaulted so that they could steal the mail as well as steal the arrow keys that are there. And what this allows the criminals to do is actually gain access to these checks. And unfortunately, the marketplace today allows them access to tools we didn't even dream of 20 years ago. They have they can access chemicals to wash these checks. They can access card stock from overseas suppliers so they can print checks that look exactly alike. Frankly, it's a very challenging fight for us to try and stop these trends unless we can start securing the mail.
So to that point, if someone can literally just steal the check from the mailbox, what should we be doing to educate consumers about check fraud that we're not doing right now?
I think there's a lot of efforts underway to educate consumers. That's why ABA entered a partnership with the U.S. Postal Inspection Service. But I think people need to recognize that if you give someone your name, your address, your bank account number, and the bank routing number, you're giving them access to your bank account potentially. And so looking at other more secure forms of payment. Senator Tester talked about credit cards that may not be viable all the time, but ACH and other forms of payments can be useful ways to transfer money.
Thank you. I frequently hear from bankers across the country about their frustration with the government's handling of suspicious activity reports, or SARS, and the effectiveness of our anti-money laundering regime. Bankers spend significant resources filing SARS and with FinCEN, which are intended to help catch criminals and prevent abuse within the financial system. But more often than not, millions of SARs are essentially sent into a black box where banks receive no feedback, and most of which are never acted upon by agency personnel or law enforcement. Again, Mr. Benda, you have spent most of your professional life working in fraud and cybersecurity. Having worked with both law enforcement and financial institutions, do you believe that the current system is working efficiently?
I think there are definitely improvements that can be made to the current system. I know there is frustration on the bank sides, and I know there's frustration on the law enforcement side. I think better coordination between law enforcement and private sector, a feedback mechanism, so that banks understand what law enforcement is looking for, so it can provide them the information they need. But then again, law enforcement providing tips and tactics and trends so that banks can better protect their customers from fraud.
Great. As I stressed in my opening statement, consumer education is critically important when it comes to preventing or trying to reduce that sort of fraud. It breaks my heart that someone will place a check in their mailbox, assuming they are paying a bill or sending money to their loved one, only to find out that a stranger is taking it. It seems that ABA is working around the clock to figure out ways to protect consumers and help institutions ensure this sort of fraud won't happen again. In fact, ABA has worked to develop a check fraud claim directory that provides contact information for banks to file a check warranty breach claim with another financial institution. Can you walk us through the ins and outs of how this directory works, Mr. Benda, and the importance of it?
So we know this doesn't solve the check fraud problem, but we're trying to do what we can. One of the challenges banks have is finding out who's the right point of contact to send that claim to so they can get reimbursed for it, so they can provide those funds back to the consumer. But we've taken it further than that. We recognize check fraud is happening to all Americans, and we're trying to figure out ways that we can make filing the claims from the customer perspective easier, trying to get rid of things such as requiring notarizations or payee affidavits, trying to make sure that when a decision is made, the customer is reimbursed more quickly. It's a challenge. It's a very complex thing to do, but we are working to try and make this process better for banks and customers alike.
Thank you.
Thank you, Senator Scott. Senator Menendez in New Jersey is recognized.
Thank you, Mr. Chairman. Mobile peer-to-peer payment applications are growing more popular and are expected to facilitate transactions worth over $1 trillion this year. Unfortunately, these platforms, which include apps such as Venmo, Zelle, PayPal, and Cash App, are also rife with scammers and fraudsters seeking to steal from hardworking consumers. Members of this committee, including the chairman, Senator Reid, Senator Warren, and myself, have led letters to banks, regulators, and the apps themselves, urging them to adopt better user protections. And I was pleased to finally see some action when the CFPB in November proposed a rule establishing supervisory authority over large non-banks with person-to-person payment apps. And I know Zelle has made some changes to its own policies. Ms. Sanchez-Adams, can you comment on these actions taken so far and tell the committee what next steps we should consider to take to better protect consumers from scams and fraud on P2P apps?
Yes, thank you, Senator, for the question. So the CFPB's proposed rule would allow them to supervise these institutions, like Cash App, the PayPal, the Venmo, EWS, particular to seeing whether they're reimbursing consumers for unauthorized fraud and their policies for reimbursing consumers when they're fraudulently induced payments. So basically to check their policies and procedures and make sure they're complying with the law. And that's extremely important, and we support that rule. What more can we take? What more actions can we take is to make sure that the law actually protects victims of fraudulently induced payments. So that would be amending the EFTA or allowing the CFPB through rulemaking to do so, and that's one huge step that we can take.
Okay. Now, according to the 2017 American Community Survey, nearly 26 million people, which is roughly 9% of the United States population, have limited English proficiency. And we know consumers who lack access to information are prime targets for predatory behavior. Can you talk about the unique vulnerabilities consumers with limited English proficiency face when combating scams?
I mean, absolutely, you name them. The fact that, we talked about consumer education, consumer disclosure, knowing products, knowing protection. Well, one, if you don't speak the language or read the language, how are you going to know that? And two, if it's buried in fine print or in some contract that you never see, you won't know those either. So absolutely, that impacts them. And then there are certain, I would say that there are certain payment systems that target low-income consumers and minorities because they are pushed out of the banking system. And so they are targeting these folks, and they are more rife with fraud. And so they really need to be doing more to protect these consumers.
In addition to being disproportionately targeted by a wider variety of scams, LEP consumers can also face difficulties in accessing anti-scam and fraud resources. For instance, there is no CFBP online complaint system in Spanish, or for that fact in any other language. And IC3, the FBI's website that provides education resources to protect individuals from cybercrimes and allows victims to report internet crimes, is only available in English. Would making more anti-fraud and scam resources available in other languages help protect IEP consumers?
Yes, absolutely.
Yeah. Talking about different groups of consumers, Mr. Breyault, another group often targeted by scammers are seniors. Crimes targeting older Americans were up 84% in 2022 over the previous year. And furthermore, older adults report higher median losses than younger adults. According to the Federal Trade Commission, the median loss from fraud was $1,750 for those 80 years old or older, compared to $548 for those in the 20 to 29 age group. These losses can have significant impacts on the financial security of older Americans as they rely on these critical funds for their retirement. What sort of procedures or training should financial institutions be implementing to improve the institution's abilities to detect and prevent fraud committed against seniors?
Thank you for the question, Senator. So seniors are uniquely vulnerable to fraud. They are inviting targets for scammers because they often have access to more assets that the scammers can steal because they've been working for their entire lifetime. Unfortunately, they also have less ability to recover. They don't have as much time to go back to work and recover these lost funds. So they do present uniquely vulnerable type of victim. In terms of what institutions can do, number one, I would say is make sure that you are training all of your employees to understand that fraud victims are not the ones who are at fault. Too often we have a stigma against older Americans who report this. We wonder, how can you be so stupid? You fell for this. Didn't you know better? Those are not, as it was mentioned earlier, those are not terms we use for victims of violent crime, and I don't think we should use that for older Americans or, frankly, any scam victim. So I think training of frontline employees to show some grace when they get these kinds of questions is important. I think also we need to be able to provide anti-fraud services to people in ways that don't involve technology. Unfortunately, many older Americans often have difficulty using advanced technology. They actually want a real person to speak with. They want somebody in a bank branch they can go and talk to about that. And those avenues are often more difficult or more costly for all consumers, but in particularly older Americans to access. So certainly if there are policies that could make that avenue of getting fraud redressed easier for older Americans is another step I would encourage you to take.
Thank you. Thank you, Mr. Chairman.
Thank you, Senator Menendez. Senator Tillis of North Carolina is recognized.
Thank you, Mr. Chair. Thank you all for being here. Mr. Benda, you mentioned the need for a partnership. Give me just a quick back-of-the-napkin list of people who should be at the table, particularly the ones who should be that aren't right now.
Thank you, Senator. I think right now there really is no table, and so it's hard to say who's there or who isn't. There's not that coordination that we'd like. I think the appropriations language that's in there, having Treasury look at who could convene the right people, makes a lot of sense.
I think, if I were just kind of spitballing, obviously banks, credit companies, payment platforms like Senator Menendez put together, consumer advocacy groups, law enforcement, but really the whole of government too.
Yes, absolutely.
And one partner that I'm kind of wondering whether or not they're already taking steps in the wrong direction would be the CFPB. Last year in August, I think it was August last year, Director Chopra mentioned that it may be more difficult to get credit header header data. We're going to go from maybe minutes for law enforcement getting it to a subpoena process. Is that like a partnership that's actually going to put us further away from a viable solution?
That's not the direction we'd like to see them go, Senator.
You are very diplomatic. It would just seem to me when you're taking that law enforcement tool off the table, at the end of the day, law enforcement has to be at the table. We have to enable them. And in fact, we need to take a look at increased penalties. I, for one, think that that's taken a step in the wrong direction. So I understand the motivations. On some part, I disagree with most of Mr. Chopra's motivations, to be honest with you. In this case, I think it's at cross purposes to the problem we're trying to address today. Ms. Sanchez-Adams, I really struggle with this because you hear Senator Tester had 2 hoverbirds charged to his account. I had my bank call me up and ask me if I'd charged $100 at a hardware store in Chicago. I haven't been in Chicago in almost 10 years, certainly not a hardware store. So we said no, and it was covered. That was clear fraud. The banks covered it. I want to come back on a question related to this to you, Mr. Benda. But how do we kind of strike the balance? We had a hearing yesterday about social media platforms. And what I was trying, and we had some horrible stories told about children that had lost their life, suicides, a number of other things. But at the end of the day, there is a parental responsibility there. These devices that we're giving children, these tablets, phones, that we have to be very careful with how they're used. Similarly, I don't believe that you can just hold the payment platforms or the banks or the intermediaries responsible for all fraud. So, and I know you said it won't work just with financial literacy or education. I agree with that. But at some point, I mean, do you agree that at some point, if we're striking the right balance, that the consumer has to own some level of responsibility? And I say that with some trepidation because I've heard these stories of people being scammed into keeping on the line and going to a Walgreens and getting a $500 payment to somebody that they think is an IRS agent. I get all that, but at some point, we can't possibly build into the system someone other than that individual is making that horrible decision. So how do you strike the balance in a partnership to address a problem that I think we all need to address?
Yeah, so as I mentioned, the UK example, initially they had an industry-led response. It was called the contingent reimbursement model, and there they would, again, apportion the responsibility between 3 parties: the consumer who was victimized, the receiving institution, the consumer's institution. And so the consumer would be on the hook for like the first 10 pounds or so, and they would be reimbursed up to a certain amount. So there's different ways that we can do that. If we change the law to allow, again, the receiving institution to bear some responsibility, not just the consumer's institution, then you can build other types of protections, like only allow a certain amount of dollar transactions per day because you're going to be bearing that responsibility, or verifying that your new customer who's receiving all of these new transactions isn't committing fraud. So there's different things that I think we can do.
Well, the reason I worry about, we can't let people off the hook, even if it's devastating consequences. The reason I worry about that is that the industry that will serve customers will then have to start thinking about who they serve based on a potential risk.
Absolutely.
Yeah, we've already said that the vast majority of the money comes from senior citizens. The vast majority of the fraud or individual interactions come from younger people. Then I could see a financial institution that says our sweet spot is not them.
Right.
So that's when I'm talking about a partnership. That's what I'm saying. Let's not throw a baby out with the bathwater and unbank. There are a number of times we're proposing legislation up here on the surface looks good, but it ultimately underbanks or unbanks people. So we've just got to strike the right balance.
Absolutely. With credit cards, consumers are already responsible for like up to $50 of unauthorized transactions. And you're right that the people who can get credit is limited because of that credit risk. So there's all of those balances can be struck. But if people are more protected, then they're more apt to feel safe and to actually choose to bank.
Well, I've gone over my time, but Mr. Chair, just food for thought because of what Mr. Bender said, and I'm sorry I was not able to get to the third witness, but the fact that we need a partnership, but we don't really have a convener now, I don't think we've done it in this committee, Mr. Chair, but it may be helpful outside of a formal committee hearing to have a work group and get all the players, and let's see who's absent, who we think are a necessary part of the team, but maybe to host a work group at some point in the future so that we can get out there and in a less formal setting say, how do we initiate this and ultimately get response from law enforcement and all the other stakeholders. That's something I'd love to participate in.
Thank you for that thought, Senator Tillis. Senator Smith from Minnesota is recognized from her office, I believe.
Thank you, Mr. Chair, and everybody. Thanks to our panelists, and I'm sorry I can't be with you in person today. I really appreciate this hearing, Mr. Chair, and I think what I'm gleaning from what everyone is saying is just how ubiquitous these scams are across the country, and I know it's true in Minnesota. So I want to ask about particularly this question of spoofing, and Mr. Breyault, I'll direct this question to you. You know, scammers have been spoofing phone numbers of banks and other financial institutions for years, but it feels like they're refining their contacts. Possibly this has, I'm sure it has something to do with how AI can be deployed, and it can leave even the savviest consumer susceptible to being victimized by this. My own dad, who's nearly 94, but totally on top of it, in so many ways had this happen to him and was well down the path of providing lots of information about his bank because he thought he was talking to the bank. And luckily he was able to stop it in time, but it created quite a ruckus. So, Mr. Breyault, what responsibility should, I'm wondering about whether telecom companies should have some responsibility for preventing spoofing, and also how banks and telecoms can work together to ensure that scammers aren't so easily able to impersonate a legitimate call or a legitimate institution.
Thank you for the question, Senator. Certainly, we need a multifaceted solution to this problem, and how scammers contact their victims is certainly one of the channels that needs to be addressed. Spoofing, as you mentioned, has for a long time been a tactic that scammers have used to impersonate not just banks, but government agencies like the IRS. We know that they use spoofing to impersonate agencies like immigration when they reach out to particularly vulnerable limited English proficiency communities. And so more definitely needs to be done. The telecoms certainly have a role to play in this. Mr. Benda mentioned better information sharing between the telecoms and the banks on this. I think that that's a great idea. And to the extent that that is not happening, I think it's a role for this committee to play in making sure that that cooperation does happen. Beyond simply spoofing, I think we need to look at the epidemic of texting and how text messages are being misused to impersonate not just banks, but government agencies. And we hear a lot about scammers impersonating retail, Amazon or UPS, telling you about package delivery. So definitely going after the channels that scammers use to reach their victims and making those safer is an appropriate thing to do, and I think would have an impact.
Thank you. Thanks very much. I'd like to just quickly talk about an issue that is quite related, I think, to this topic today, which is how businesses and other institutions are targeting shady practices at home buyers and homeowners. Ms. Sanchez-Adams, I'd like you to answer this question. One of the things that has been happening in Minnesota and I think around the country is we are seeing a proliferation of these very predatory contract for deed contracts where a homeowner enters into a home purchaser enters into a contract with a home seller to pay for the home in installment, thinking that they're in the process of buying their own home. This has been targeted specifically to Somali Minnesotans who in their faith traditions are discouraged from either paying or profiting from interest. And so this is often marketed falsely as an interest-free way to buy a home. And then what happens, of course, is folks get into this contract and they realize that if they miss just one payment, they have they are ended up forfeiting all of the money that they put into the home and losing the home. They find out, for example, that they have balloon payments at the end, none of the protections that exist with a traditional mortgage. So, Ms. Sanchez, could you just talk about this a bit from your perspective as a consumer advocate and what we should be doing a better job of here? Senator Lummis and I introduced a piece of legislation yesterday just to help protect homeowners, help protect people from these predatory practices.
Yeah, thank you for the question. And absolutely, I was a legal services attorney for 13 years and would hear of these stories all of the time. And my colleague, Sarah Bowling-Mancini, actually testified on this very issue. And so I would recommend you look at her testimony. She's absolutely the expert on this for recommendations on what you can do.
Thank you. Thanks, Mr. Chair.
Thank you, Mr. Chairman. We're fortunate to have a growing number of innovation and just different ideas coming into the financial sector as we look to find new ways to make sure that we are serving existing clients, that they're doing that, and then also how do we reach individuals and families and communities that haven't always had traditional access to different things in the financial market. So I've been glad to see that innovation begin to occur. However, we know that bad actors are exploiting our financial industry only to continue to adapt to the new innovation that we're having and finding ways to undermine consumers, and ultimately fraudsters are targeting these individuals. They're targeting vulnerable Americans with phone, internet scams to the tune of almost $9 billion a year. And in Alabama in 2022, we were actually defrauded, Alabamians, by nearly $55 million. And so that number is not only alarming, but even worse, it continues to rise. And so we must do more to protect consumers. And while thinking carefully about regulatory changes that would impact the benefits provided by banks or P2P apps that provide fast and non-fee payments between friends, we've got to look at what the end result is, what is happening, and figure out how we being Congress, industry, government agencies like the CFPB, can actually get to the root of the problem. And the CFPB still, they're supposed to be the agency that focuses on protecting consumers, but time and time again, it seems that they are utilizing their resources, their time, and their energy to pursue regulations that actually only perpetuate the problem. For instance, I'm concerned that the Bureau's expected changes to the Fair Credit Reporting Act could directly stifle banks' fraud prevention efforts. Mr. Benda, you mentioned this specifically in your written testimony, that the CFPB's proposal could create new legal, practical, and procedural difficulties for banks to detect and prevent fraud and crime. Can you elaborate a little bit more on that for me?
Thank you for the question, Senator. The concern here is that banks routinely access this information, and they use that information for fraud purposes. I think the CFPB is targeting others that might use it for commercial purposes, but when you put the Fair Credit Reporting Act around that information, access to that type of information, it creates a whole series of barriers that require notifications to the potential criminals that banks are taking certain action on their accounts. And so for normal Americans, it doesn't make any sense. Why I wouldn't mind being notified, but when banks have these requirements placed on them by FCRA for this type of anti-fraud information, it creates notifications to the criminals and reduces the ability, frankly, for them to share that type of information or use that type of information.
So what would be a better path forward on this, do you think?
I think it's a complex issue. We'd be happy to get back to you with any details on that, but we'd love to work with you on that.
Absolutely. Well, it just seems that financial regulators tend to be less focused on actually stopping the fraud and more determined just to see the institution itself pay for it. And this approach, I believe, is not only misguided, but I think it fuels criminal activity. The solution to preventing financial fraud is not to create additional hurdles for banks and law enforcement or to halt innovation completely through excessive and burdensome red tape. Rather, we have to continue to adapt ourselves. I think that this includes increasing consumer education efforts across the board. This is one of the most important undertakings I think that we could do to help get fraudsters out of the way and allow Americans to preserve their savings and small business accounts, among so many other things. So greater security and anti-fraud mechanisms don't help, though, if consumers can be convinced to willingly hand over their money and their login credentials to a fraudster. So just in follow-up on that, what are banks currently doing to educate, Mr. Benda, their customers about fraud and help them to prevent this, keep them from falling victim to what we're seeing occur across the country?
The biggest effort we have is our Banks Never Ask That campaign. I was interested in Senator Menendez's comments about non-English speakers. We recently launched that campaign in Spanish. So we recognize we need to reach all types of consumers to educate them so they don't, banks will never ask for your password PIN, ask you to send money to yourself. We also have an ABA foundation that looks at elder scam awareness. We create training courses for our bankers so they can help their customers. And we're interested in partnering with the government and other public sectors to try and amplify these messages. We worked with other associations like the AARP, but we haven't seen as much engagement as we'd like to see from maybe some of the regulators.
Well, I hope that those people step up to the plate so that we can help prevent the fraud and protect our consumers across the country. Thank you.
Senator Britt, thank you. Senator Warner from Virginia is recognized.
Thank you, Mr. Chairman. Thank you for holding this hearing. And I want to jump right into it on some of the tech issues. I know some of my colleagues were mentioning the Judiciary Committee hearing yesterday. As someone who thinks that has felt for a long time that the original intent of Section 230 back in 1996 might have made some sense then. This has turned into a get-out-of-jail-free card for all the social media companies, and I was glad to hear Senator Graham talk about it yesterday and other members. I've had what I thought was a fairly simple reform of Section 230 for a while out there called the Safe Tech Act, which would basically say if it's illegal in the real world, it ought to be illegal in the online world. And there ought to not be this kind of, and again, I can't think of any other term other than a get-out-of-jail-free card. That obviously hits us in the consumer fraud area. I think the FTC just did a study that said that, the way I read it was that when you use typical contact methods, phone, email, whatever, fraudsters have about a 6 to 17% hit rate. But when it appears on a social media platform or an online ad, that fraud rate goes up to 61 to 63%. Holy heck. So whether it was the kind of gripping testimony we heard yesterday of parents who've lost their kids, or the ability to have Americans ripped off. I know this may be a little out of your lanes, but any of you got any thoughts on whether we ought to have a thorough reexamination of Section 230, even in terms of consumer protection? Why don't we start with you, Ms. Sanchez-Adams?
Yes, thank you for the question. I mean, I agree. As we've all talked about, there's so many different avenues that we need to take to address the issue of payment fraud. As we heard earlier, holding those telecom companies that are allowing robocalls and robotexts to happen, yes. Holding social media platforms that are allowing these fraudsters to do the work that they're doing on that.
But if you're going to hold them accountable, doesn't that require a change in Section 230?
Well, yeah, I will agree with you that, yes, we need to find a way to hold all players accountable. And that's why we also think institutions that are banking the fraudsters should also be held accountable. So it's a multi-pronged approach.
Mr. Benda or Mr.
Breyault? Thank you, Senator. I'm not familiar with the act, but I truly believe focusing on impersonation scams that allow people to basically con people out of money is a great area, and we'd love to work with you on that. Sir.
Senator Warner, thank you for the question. I think as you've heard from all the witnesses today, we need the actors where these fraud is being facilitated to have more skin in the game. They need more incentives to invest and to protect their users, because ultimately it's the users who are the ones who are making them their money.
But again, the fact is, I'm an old telecom guy, so this is where I'm a little just crazy to me. Section 230, basically 1996 Telecom Act, said if you're one of these platforms, you have no responsibility at all for any of the content that appears. So the distribution model for this fraudster activity goes through the platforms. And if we don't hold them accountable, I don't think we're ever going to get there. So I also know some of you touched, I'm going to get one more question in on how we can do more real-time reporting. I'm chairman of the Intelligence Committee. We've managed to move forward on real-time reporting as we see threats in the intelligence system. We're still got a ways to go. I do think in terms of internet-based fraud, real-time reporting has to be a component. But I want to move my last question to AI. One of the things that scares the dickens out of me on AI, some good things coming out of this, but there is the scale and speed which these tools can be used. And they don't have to have a lot of sophistication. Now, Senator Kennedy and I have a bipartisan bill that looks at Could we bring FSOC to the table to look at where there are gaps? Could we end up saying if you use these tools, you might even have things like treble damages, which already exists in the SEC world. We've been thinking about this on market manipulation, but we've also been thinking about it in terms of consumer fraud. And one of the things that really concerns me is a lot of these AI tools, you may say just go make the most money possible, and that may then result in screwing around with consumers. But it goes to the question of intent. My time is clicking down. Do any of you have any thoughts on how we get at this intent issue around AI tools?
So, Senator Warner,
Maybe
I
we
would
could take it for the record. But
yeah,
Be brief, each of you, if you would.
sure. I definitely like the idea of increasing penalties for bad actors who use AI.
Good. Well, if you could think about the intent question, I would love to get some thoughts on that. Thank you, Mr. Chairman.
Thanks, Senator Warner. Senator Butler from California is recognized.
Thank you, Mr. Chairman. If it's okay, I'd love to sort of go back to the point of conversation that Senator Tester actually introduced, and this question of who. There are a lot of perceptions that these kinds of scams and fraudulent activities happen mostly directed towards older people. And we've had a lot of conversation here about that. And I think it's important as we have started to uncover in this hearing that we paint a full picture of who actually are our victims and how they are being impacted. There's been some research put forward focused on Gen Z and their impact here. The 2022 Annual Cybersecurity Attitudes and Behaviors Report showed that Gen Z and millennials were actually more likely to fall victim to certain types of scams like phishing than other generations. The data also showed that Gen Z Americans were 3 times more likely to get caught up in online scams than boomers, and the cost of falling victim to online scams has risen in 2017. Young victims under 20 are estimated to have lost $8.2 million in online scams, and that rose dramatically from 2017 to 2022, where that loss has now exceeded $210 million. Ms. Sanchez-Adams, I'd love to just start with you on this question. Given that the younger generations are already struggling financially compared to their parents and grandparents, are there specific examples that you're aware of that are happening in the financial services sector that are working with schools and youth organizations to raise greater awareness about online scams? We've talked a great deal about partnership here, and I'm trying to get at, are there actually targeted efforts focused on this younger population?
None that I am aware of.
Mr. Benda, do you have any specific examples that you're aware of?
ABA does run a Teach Children to Save effort where we partner with bankers and we go out to different communities to try and, it's a financial education, but also as a scam component.
Mr. Breyault.
Senator Butler, at NCL, we have a program called LifeSmarts, which is targeted at high school students. And one of the parts of the curriculum at LifeSmarts is to teach younger consumers, particularly those in high school age, how to spot and avoid scams, including the ones that you just described. I would also just like to point out that while the numbers, you've talked about $210 million for losses, we've also talked about $9 billion in losses overall. I just need to think it's important to stress that those numbers, by almost every cybersecurity expert and fraud expert that we talk to, those numbers are a significant undercount.
Sure.
We know that consumers do not report these scams as much as they happen. So the numbers you hear are bad, but the real situation is likely much worse.
I appreciate you making that point because a lot of this that's a little bit of what I'm trying to get at. Young people are falling victim to these crimes and the shame and stigma associated with, falling for them, being so stupid as the term was used earlier, to fall for them doesn't really help us get at prevention. And so I just wanted to follow up, Mr. Benda, Mr. Breyault, you mentioned some specific programs. Is there any information that you could share relative to scale of those programs? How many high schools are you working with? Are there, I have 6 million children who are residents of California. 1 in 4 American kids are residents of my state. And so I'm trying to figure out what is the scale at which we are actually moving, and if there are recommendations that you would have to get to a greater scale faster.
Senator, that program is run by our ABA Foundation, and they would love to share that detail with you. I'll make sure that we get that to you.
Sure.
And while our program reaches tens of thousands of students across the country, and the content reaches hundreds of thousands more, with additional resources, we can always reach more. But yes, certainly programs like LifeSmarts, programs like the one Mr. Benda discussed, do play a role in helping consumers build a resistance against these scams. But that's not the only thing that's going to stop this. We need legislation that actually goes at the incentives that that companies have to actually protect their customers from these scams in the first place.
Thank you. Mr. Chair, I'd love to submit a follow-up question for the record with the staff, but thank you for your time.
Of course, thank you, Senator Butler. Senator Reed of Rhode Island is recognized.
Thank you very much, Mr. Chairman, and thank the panel for their testimony. Ms. Sanchez-Adams and Mr. Breyault, the Electronic Fund Transfer Act and its implementing rules cover transfers done through the HC system, where it is not clear if transfers done through wire transfer systems are covered. And I'm very concerned this gap or ambiguity leaves consumers unprotected against fraud for very large electronic payments they're doing for things like a down payment on a home. Ms. Sanchez, first, how widespread is the issue of wire fraud for consumers, and can you walk us through some common scams?
Yeah, so it is unfortunately exploding. I get 2 or 3 emails a week about it from consumer lawyers, and sometimes even from consumers themselves. And there's always, news reports on this. Some of the common scams, you have one that is horrible is generally it's a tech support scam, and they gain access to somebody's laptop or computer, and then gain access to their financial information without the consumer knowing, and then they get onto their bank account and wire transfer and do a wire transfer to a crypto account. And then, the consumer is out of luck, even though state law says that consumers should be not held liable for unauthorized wire transfers. There's all of these caveats. If there was a security procedure in place, if the consumer agreed to it in the account agreement, then, generally the banks will say, sorry, you either it was sent out and there was a security procedure that was used, so we can't help you. Or if you by chance gave your account information to someone, it would be protected under the EFTA, but not under the UCC.
And Mr. Breyault, your comments.
Yes, certainly in addition to the type of scams that Ms. Sanchez-Adams discussed, we see this where scammers get in between consumers during a real estate transaction. For example, when you're sending money to a title agent, a scammer may impersonate the recipient of those funds in order to disrupt that transaction. And I think certainly one of the things that all of these transactions have in common, whether we're talking about ACH or peer-to-peer or gift cards to some extent, is that the money is transferred very quickly, nearly instantaneously. In fact, that's why it's so attractive to the scammers. So I think as part of the solutions that you consider in this is, do we need to slow down some of those transactions? Is the benefit we're getting from instantaneous payments that are oftentimes irreversible, even after fraud is discovered, are those benefits outweighed by the cost to consumers of the fraud that is occurring on these systems?
Now, can the Consumer Financial Protection Bureau deal with these issues under current law, or do we have to pass additional legislation to try to address these scams?
So the CFPB does have a tremendous amount of authority to start to address some of these scams, and they are exercising it. But I would say there is more that could be done. We discussed, particularly in my testimony, the Protecting Consumers from Payment Scams Act, which would redefine what is an unauthorized transaction to include these kinds of induced fraud, or also known as authorized push payments, as covered under EFTA. So certainly that is one area where the CFPB could help this. This committee could help the CFPB do its job even better.
Ms. Sanchez-Adams, your solutions?
Yes, the CFPB has authority under Regulation E, or the EFTA, to do rulemaking. So through rulemaking, they could clarify, there was the exemption to wire transfers that the Federal Reserve Board said included the Fedwire chips and And so they could change that after doing rulemaking, open comment, and all of that. They can clarify things like what fits under errors, because they can create additional errors under the EFTA, so they could do that through rulemaking.
Well, thank you very much. Thank you all for your testimony today. Mr. Chairman, I will yield.
Senator Vance from Ohio is recognized.
Thank you, Mr. Chair, and thanks to our three witnesses for being here. You know, I wanted to ask a series of questions, I guess, to Mr. Benda, because, you know, this is a very important topic, fraud, how it affects consumers. But in particular, I hear a lot about how it affects elderly consumers in the state of Ohio. You know, we spend a lot of time in Congress, I think, rightfully lauding innovation and advancements in technology, and they do bring a lot of benefits, but of course they bring a lot of risks. And, you know, one of the things that, you know, I hear a lot about from constituents back home is that there are a lot of spoofing scams sort of deploying and employing modern technology to basically trick a lot of our elderly folks into giving money, very often preying on sort of the best sentiments. You know, a grandchild calling needs bail money, something like that. And of course it's not. It's very often a person who's just trying to scam them. And so I really worry about what this looks like, and whether, you know, the sort of the modern technology infrastructure that we have in this country, while obviously it has a ton of benefits, has also enabled this massive amount of scam on our elderly Americans. It's not just anecdotal. Americans lost in 2019 over $3 billion due to financial exploitation, even though seniors are particularly targeted by a lot of this. So I would ask this question, Mr. Benda. I know this is an issue that affects your member banks, and obviously it's customers. I know that you guys deal all the time with these scams, and then you have to pick up the pieces and hopefully help the customers, I think, address some of the problems. Could you build on sort of what you guys are seeing, what's out there, what are the spoofing scams that are particularly concerning to you, and what we can do from a financial and banking perspective to mitigate some of this stuff?
Thank you for the question, Senator. So I think you're hitting the nail on the head. The FTC even put out alert just last summer that talked about bank impersonation scams being the #1 scam out there.
Yep.
Everyone probably on this dais has gotten that text message that says, hey, did you have this fraud alert? Did you make this transaction? And you reply to that because it looks like exactly like something coming from your bank. And then they lure you in, they socially engineer you in. And I want to be clear, these people are very good at what they do. They're very bad people, they're criminals, they're very convincing.
Yep.
It is not stupid people that fall for these. So what we would like to see happen is trying to attack this impersonation scams. Can we figure out a way, and you're right, our technology infrastructure isn't where it needs to be, to ensure that that caller ID message is accurate. If any point in that process that authentication drops, there's a process the FCC has, but it can be worked around. If that authentication drops, it should be an unknown caller. We shouldn't allow people to fraudulently display wrong names. My dad's 86. If it says his bank on that caller ID, he thinks it's his bank.
Yep.
And so we need to stop that, because they are the ones that are enabling those scams to occur.
And is that something that telecommunications company, maybe this is outside the jurisdiction of this particular committee, though I know a guy on the Commerce Committee. Is this something that, like, our technology and communications infrastructure should be better at? I mean, you know, recognizing it's not necessarily your area of expertise, like what can we be doing to better police this stuff and prevent it from happening?
So the FCC has active rulemaking on the implementation of Stir Shaken. We'd like to see that move more quickly. We'd like to see it more default to, versus right now they let messages through if they meet certain things, basically default to you don't get to display any message unless you're at the gold standard level.
Got it.
I think that's one thing we could make right now that would really help.
Okay, great. I'll yield the remainder of my time, but appreciate the guests being here and appreciate the chairman for hosting the committee.
Senator Vance, Senator Van Hollen of Maryland is recognized.
Thank you, Mr. Chairman, and thank all of you for being here and for your testimony. Earlier this month, the FTC released its annual report on consumer activities, and they reported that my state of Maryland is among the top 5 states with the highest per capita rates of reported fraud. And this has been an ongoing issue in Maryland, as around the country, and it takes all forms, as the conversation today has indicated. I want to focus for a moment on one area of this kind of fraud, and right now the failures of our system to catch it and compensate people for it. We have an open case in Maryland where the victim of check fraud reported the fraud right away. But their local bank, their home community bank, is still awaiting payment from the much bigger bank in which the fraudulent check was deposited. And I'm hearing a lot from Maryland community banks about this, and I think their view is well expressed by a letter that I have here from the Community Bankers Association of Illinois, written about a year ago, and I'm just going to quote a part of it. Our members have been particularly frustrated because these fraudulent returns have been deposited into accounts at the nation's largest banks, and the process to determine the liability for the fraud losses and reimbursement is protracted. When this issue has been raised to federal regulators, the responses have been that it's not their responsibility to intervene in bank versus bank disputes. Our members respectfully urge the OCC, Federal Reserve, and the FDIC to reconsider your position regarding fraudulent return in light of the information included in this letter. This is a letter that was addressed to them. They make the point that they're not asking federal regulators to pick winners and losers. They just want to expedite this process so that those who have been defrauded can be made whole, and those who were negligent in cashing a fraudulent check will end up making the payment. If I could start with you, Ms. Sanchez-Adams, can you speak to this issue and whether or not, in your view, the larger banks are taking advantage of the weaknesses in the system to prevent quick payment to the local banks so that they can in turn reimburse a defrauded customer?
Yeah, so one story that we were contacted about was a man who sent a check to the IRS, and it was deposited into, I believe it was Wells Fargo account, and it was to the U.S. Treasury. And so clearly they are not the U.S. Treasury, but they delayed for 2 years to refund the consumer's bank. And so the consumer, though the law says a consumer should be reimbursed by their own bank, that bank was dragging their heels because they were waiting to get payment. And the consumer's bank was also a large bank. So it's not like they didn't have the funds to refund the consumer. And I also just want to point out another problem with check fraud and check alteration is that it's not just them stealing it in the mail, but I've heard a lot of stories about, in particular, one that I mentioned in my written testimony, where they didn't even have checks associated with their account, and fraudsters create checks out of thin air. And because banks don't often provide written statements anymore, and they don't provide copies of checks back to consumers, it's hard for them to know that this is happening, or especially when it's altered, to know that it was altered if you don't see the check to see that it was altered.
I appreciate that, and this we saw a big rise in this sort of check fraud during COVID, but it's continued, and obviously it impacts those who don't do online transactions, mostly the elderly. Mr. Benda, if you could talk to this issue. I mean, obviously you've got members of different sizes, member banks, but this is clearly an issue that's hurting community banks. Do you agree that the federal regulators should be more engaged in resolving these issues?
So, Senator, I appreciate the question. I don't think anyone thinks that the check fraud processing system is working as well as it could. Banks of all sizes agree the timelines to process these are taking too long, and that's why the industry is taking its own steps to try and figure out ways that we can accelerate this process, such as developing a universal claim form. We see sometimes banks will file a claim with one bank and they'll have to go iterate to make sure they provide the required information, trying to reduce the information the customer is required to provide. So trying to make this process easier. In terms of the regulator involvement in this, I agree with them that they don't pick winners and losers. I think it really, because each case is so different, it really needs to be that determination between the banks.
Well, I understand. FinCEN and other regulators, they do pay attention, obviously, to the SARS reports and sort of major fraud, but a lot of this fraud that's impacting, regular people is falling between the cracks, and those regular people are left holding the bag. So I appreciate that you, as well as I think you, Ms. Sanchez-Adams, also spoke to some language that we put in the FISG appropriations reporting language. I chair that subcommittee. It's aimed at creating more of a public-private partnership to really try to plug the holes and gaps in the system. And I understand you both agree that that would be a smart move. Is that right?
Yes, Senator.
Agreed.
Thank you. Thank you, Mr. Chairman.
Thanks, Senator Benda. Senator Warnock from Georgia is recognized.
Thank you very much, Mr. Chair. Fraud is a serious problem in the United States, and in this sector is growing. A Gallup study found that 8% of respondents said that they had personally been a victim of fraud in the past year, 8%. In the first quarter of 2023, reports of financial fraud per capita occurred more often in Georgia than in any other state, according to data published by the Federal Trade Commission. Forbes Advisor ranked Georgia the 5th most financially scammed state during that time period. With these incidents of fraud becoming more sophisticated and more realistic, unsuspecting folks, seniors, and others are being targeted directly and personally, meaning that consumer education plays a key role in stopping scams and fraud before they start. Ms. Sanchez-Adams, what have been some effective ways to educate consumers regarding the risk of financial fraud and scams?
Well, sir, I think that financial education is extremely important, but it doesn't solve the problem, especially because the scams change overnight. So you tell them about one thing and then it changes to the next day. So, there's things that you could be done like in-app warnings. And I know that, Mr. Benda has spoken about some of the things that the banks do. You can make some things in-app, but I think more than that, you need to hold the institutions that are receiving those payments from the fraudsters more responsible for reimbursing consumers that are harmed.
So in that regard, are there additional authorities and resources that the federal government needs in order to protect Americans from financial fraud?
Yes, I think you could pass legislation, as I mentioned, in the EFTA to hold those institutions that are receiving the payments responsible, to have them bear some liability. The CFPB can do things through regulation, and certainly I agree that we should have the task force to get more information and more people at the table to talk about this and come up with solutions.
So there's more work to be done, and our rulemaking and legislation hasn't kept pace with the reality on the ground. Is that a fair assessment?
That is correct.
Now, my home state of Georgia is a hub for financial technology and payment processing. In fact, Georgia-based payment processing firms handle about 70% of United States transactions. Many fintech and payments companies are focusing on activities that traditionally were handled by consumer banking, including digital payment apps and wallets. When consumers transfer money using traditional financial tools, there are financial protection laws in place for these traditional tools that protect their money. But since many of these digital payment systems are owned by large non-bank financial companies, they may not carry the same safeguards as financial institutions or debit and credit cards. Last November, the CFPB proposed a rule that would ensure that certain non-bank digital wallets and digital payments apps are subject to the same supervisory oversight as banks and credit unions, again, keeping pace with the reality on the ground. How would the CFPB's proposed rule help protect provide additional protections to consumers who rely on these payment apps?
Yeah, they would have supervision authority, meaning that they can go in and examine the books. They can talk to them to see the policies and procedures for them protecting consumers from both unauthorized transactions, to see if they're actually reimbursing consumers, doing reasonable investigations, or what they're doing to protect fraudulently induced scams, like basically, especially things like Cash App and Venmo, who have access to both accounts and are seeing those that are receiving the fraudulent payments and where it's going, that they can freeze them, stop them, investigate them, and try to make consumers whole.
There's no question that consumers deserve to know that their funds are protected by consumer protection laws, regardless of their payment method. We can't have one set of guardrails for one sector and not have the same guardrails for another sector, or as we see increasing digital operations in the banking sector or the financial sector. What other steps can be taken to protect consumers?
So one thing is to make sure that consumers are reimbursed for fraudulently induced transactions, or scams as people talk about that. Full stop. And then hold those financial institutions that are receiving fraudulent payments responsible, and make sure that payment systems are doing more to protect consumers as well.
Great. Thank you so very much.
Thank you.
Thanks, Senator Warnock. Senator Warren of Massachusetts is recognized.
Thank you, Mr. Chairman, and thank you for holding this hearing. So, cyber criminals are exploiting cryptocurrency to scam American consumers out of billions of dollars every year. According to the FBI, Americans are reporting losing more money to crypto-related investment fraud than any other kind of investment scam. In 2022, that amounted to reported losses of more than $2.5 billion, and that was up 183% in just 1 year. Now, according to the Federal Trade Commission, since 2021, crypto has accounted for about 1 in every $4 that consumers report losing to fraudulent schemes, more than any other payment method out there. So let's focus today on one type of cryptocurrency, stablecoins. Stablecoins like Tether and USDC are supposedly pegged to the dollar or other assets that are relatively stable. And this is supposed to make stablecoins safer and less volatile than other tokens, kind of the responsible big brother of crypto. But new data show that stablecoins are now used in the majority of illicit crypto transactions, especially in the scams. Last year, more than 70% of the crypto scams that we know about involve stablecoins. So, Ms. Sanchez-Adams, as a consumer protection expert, does it surprise you that stablecoins are increasingly being used to scam customers?
No, as you said, stable coins are not as stable as they claim, and they really are primarily a gateway to support unsafe and dangerous crypto assets. So it's to get them into the door to do the crypto.
All right. So crypto scams, as you know, takes a variety of different kinds of forms. Pig butchering, a kind of romance scam where criminals build up a personal relationship with their targets online and then convince them to invest money in fake crypto platforms before stealing the money. Many of these scams are perpetrated by sophisticated criminal organizations based in Asia, including North Korea. Mr. Benda, you are an expert on cybersecurity. What is it about crypto that makes it such a good tool to scam people out of their money?
Yeah, so the challenge we have is that these cryptocurrencies operate outside the banking system, operate outside of regulation, operate outside of BSA AML. Additionally, the technology is there that allows you to mix and hide transactions. So you can go into that crypto ecosystem and you can actually obfuscate where that money goes after that. And additionally, you can put things together what are called cold wallets. So you could download millions, hundreds of millions of dollars onto a single USB and transfer that internationally without anyone knowing anymore.
Wow, it's a lot to be able to hide. You know, we can't keep making it easy for criminals and for countries like North Korea to defraud Americans out of their hard-earned money. 20 senators, both Democrats and Republicans, are sponsoring the Digital Asset Anti-Money Laundering Act. This bill would plug the holes in our anti-money laundering rules to make it easier for financial regulators to track suspicious crypto activity, to make it more visible, and to shut down the scammers. So, Mr. Breyault, your organization, the National Consumers League, has been protecting consumers for over 100 years. Would this bill help protect American consumers from crypto fraud?
Absolutely, yes, Senator.
Want to say a word more?
So cryptocurrency is certainly the next frontier when it comes to payment scams. It offers a scammer's dream, anonymity, immediacy, and irrevocability. And because of the availability now of cryptocurrency kiosks in convenience stores, grocery stores, smoke shops. I mentioned earlier, by one estimate, there are more than 34,000 of these kiosks across the country. the ability to send cryptocurrency to scammers is usually just down the block for the vast majority of Americans. So yes, your bill would do much to protect consumers.
Well, thank you, Mr. Breyault, and thank you to the National Consumers League. We are very grateful to have your endorsement from your organization. I also want to say thank you to the National Consumer Law Center, Ms. Sanchez-Adams. Our bill will help protect consumers and protect our national security. And I look forward to working with my colleagues on this committee so that we can get it passed. Thank you. Thank you, Mr.
Thanks,
Chairman.
Senator Warren. Senator Fetterman from Pennsylvania is recognized.
Well, thank you. It's I hate to have to follow my colleague Senator Warren and talk about crypto because she's, of course, the expert on that. But here into it. So now it turns out that scammers, hackers, and terrorists now have chosen to use crypto. I mean, it's a shock, right? And it makes you wonder why that. Now, do you think the terrorists and those folks are using crypto for the airline's mileage points? Or is it because that it's untraceable and they're engaging in illegal kinds of things? Is that a fair statement?
Yes, Senator.
Yeah. So, and now we all, of course, we have the bank meltdowns and crypto funding from Hamas, and now we have scammers and hackers using crypto to steal people's, money, of course, as well, too. Now, again, directly, Mr. Breyault, can you speak to how people have now praying to these kind of crypto scams? And my real question is like, now, is that redundant to have the term of crypto scam? Is crypto one gigantic scam, really, on that? So, Mr. Breyault?
Yeah, I would say that crypto is the next payment method of choice for scammers. They recognize that your average everyday consumer is probably not familiar with how it works. And yet, as I just mentioned to Senator Warren, the ability to give your cash to buy crypto and send it to a senator is usually to a scammer is usually as close as your closest grocery store. Cryptocurrency, we believe, is for people who want to use it. It's a sophisticated investor who should be looking at cryptocurrency, not my grandmother. That is, and scammers prey on that. They prey on the fact that consumers aren't familiar with how it works, and they use that to defraud them out of billions of dollars and growing.
Well, an investor, and again, to me, it's kind of a paradox too, a crypto investor, because really, I know somebody once said that they wouldn't buy up every cryptocurrency for I think it was a quarter, and really, so why would you invest in crypto for a quarter unless you could sell all of it for 50 cents? Kind of like the greater fool kind of thing. Is that really what underpins it? Or is there any kind of inherent value on that, really, why does it seem to be so open to scamming? Is there a connection?
Well, Senator, thank you for the question. Personally, I would never invest in crypto for all the reasons that you just discussed. But for scammers, it's incredibly appealing because it offers what they are after, which is the ability to get their funds quickly, anonymously, and in a way that is practically impossible to reverse, even when the consumer discovers the transaction.
Anonymously, right?
Yes,
so it's
Senator.
untraceable and anonymously. Okay.
If I may, one of the things that when we're talking about crypto and scams is to take into consideration how the money is actually going into crypto first. So we hear a lot of stories that it's actually unauthorized or even fraudulently induced through wire transfer, and then there are no protections for the consumer there. If it was sent through like an electronic funds transfer that's covered by the EFTA, they would have protections, but we've heard of it coming either from HELOC accounts or from wire transfers, and so initially, even that transfer out has no protections for the consumer.
Oh my gosh, that's amazing, because I literally was going to pivot to you for the next question, and that is really about that. And it's like, my staff's much smarter than I am, and I wasn't really aware of this, but they brought it to my attention, is that true bank customers, they're not protected from hackers if they initiate a wire transfer. Right. I mean, like, that's outrageous. I didn't even know that myself. Is there a fix for that or anything that you would recommend? Because, again, if I wasn't aware of that, and I'm on the banking committee, so think of how many millions of Americans that aren't aware of this.
Yes, absolutely. We get interviewed all the time, even by Good Morning America, about this very same question. So yes, make it be covered by the Electronic Funds Transfer Act. There was an exclusion when it was originally written in the 70s, and wire transfers were really business to business, and consumers weren't doing it, and it was in person. Now you're doing it online through mobile and digital applications, and so it is in essence an electronic funds transfer now. And even the New York AGs has argued in a suit they filed against Citi that it actually is an electronic funds transfer when it's unauthorized, a request from someone who isn't the consumer to send it somewhere else. So it can be included in the EFTA, and of course we shouldn't forget, the fraudulently induced transactions. Those should also be included in the EFTA.
So I guess you're saying so that really the banks, I mean, they're the experts and they're the professionals. They should be held accountable, not then a customer that may not have any kinds of idea in that level of what's going on. Is that a fair statement again?
Right. Again, if it was unauthorized and the consumer didn't do it, then yes, they should be reimbursed.
Okay. Mr. Chairman.
Thank you, Senator Fetterman, for your incisive questions. It's my turn. I think I will be the last questioner. Ms. Sanchez-Adams, like an hour and a half ago, you gave your 6 recommendations. The CFPB, as you know, last year issued a proposed rule that would allow the consumer agency to supervise larger payment apps. What is this? Just walk through, if you would, what this proposed rule means for large payment apps like Venmo and Cash App and Zelle, and the consumers, what it means to consumers who use these platforms. Sort of give us a synopsis of what this rule is actually going to mean for sort of all the players.
So one thing is that nobody actually knew what was happening on these platforms until this committee sent a letter, right, asking for that information of how many people are actually getting reimbursed for unauthorized transactions and how many people are getting are not being reimbursed when they're scammed. Nobody had access to that information because they weren't supervised. So the CFPB being able to go in and supervise that means you'll actually know if they're following with the law, the law. So unless you were a private attorney who was suing them because a consumer came and told you a story, there was really no way to know what was happening behind the scenes. So that's why this rule is so important. And again, it's not just Venmo, PayPal, and Cash App, but it's other players as well.
Thank you. And that really is the work this committee can do. We do oversight. We sometimes just inform the public and can ask questions like that. The larger participant rule, as you point out, will allow the agency to supervise these apps, ensuring that they follow consumer protection laws, and why we need a strong, independent CFPB. That's been said many, many, many times in this from this dais from a whole bunch of my colleagues. And I would also point out that this attendance is sometimes spotty in this committee, sometimes not. But this is such an important issue to so many that, at least on our side of the aisle, all but one member showed up, and a number of members on the other side too. And that's a good sign. Ms. Sanchez-Adams, you discussed the differences between unauthorized transactions and fraudulently induced transactions, with the major difference being that financial institutions are legally required to reimburse consumers for the unauthorized transactions. Does the same hold true for unauthorized transactions using wire fraud? Or consumers and their money really protected from scammers there?
No. As I had mentioned in detail, and I think in my written testimony, is the Uniform Commercial Code is the state law that applies to wire transfers, excluding international remittances. And it wasn't designed to be a consumer protection statute. It was designed for banks to know the procedures when using these. And so right now, it essentially says if there was a security procedure that the consumer and the bank agreed to, and the consumer doesn't really agree to it when it's in the fine print of something they're clicking to agree to be able to have an account, or often those terms say one that we may choose, one that we may call you or we may not call you. So if the banks use that procedure, then they argue that they don't have any liability, and it's pushed onto the consumer. This is why we really need wires to be covered by the EFTA.
Thank you. Mr. Breyault, we're hearing more and more anecdotes about how scammers are using AI to create personalized attacks. For example, scammers, as you know, can use a consumer's voice from a social media post and use AI to replicate that consumer's voice to gain access to account information. How do Congress and regulators get ahead of these problems?
Thank you for the question, Mr. Chairman. I certainly think that AI has the potential to be as big an accelerant of fraud as the internet was 30 years ago. And in addition to the voice cloning technology that you talked about, we are also very concerned that AI can be used by criminal scammers to basically supercharge the ability to identify the most vulnerable consumer. So we know that criminal gangs will fight over lists of potential victims in the U.S. that they want to use for many different kinds of scams. With AI, they can target with laser-like precision the consumers that they think are most vulnerable to these scams. So even if they don't need to use voice cloning, just being able to know the right people to contact, how to contact them, and the types of words to use to get them hooked on the hook for these frauds is one way that we are really concerned about how AI is going to be used. I think we are still developing sort of specific policy proposals that Congress could take, but I did appreciate what we heard earlier about treble damages against scammers using AI in this way. I think that's one area that this committee should consider, and we're happy to get back to you with additional policy proposals for how to start to tackle the threat that AI poses.
That would be helpful. Thank you. Last question, and be as brief as you can. I'm over my time, but this is the end, so that's fine. Mr. Benda, my colleagues and I wrote to your organization, the ABA, expressing concerns about the alarming increase in check fraud scams. Your organization created an information directory providing contact information for banks to resolve check fraud claims. That's good as far as it went. Has this directory improved the timeliness in which defrauded customers get their money back? It seems that banks' customers are all too often waiting too long for their money, not something that people often can afford when it's thousands of dollars. So assure me that it's more timely than that and that you're working to make it even more timely.
Thank you, Mr. Chairman, and I appreciate you recognizing the efforts we've made on this. So the directory now encompasses almost 1,700 banks, and we have heard from many banks at how much better it has made their lives because they can actually file these claims faster. Are we where we want to be? No, we're not. And that is why we're continuing our efforts of reaching out to banks to try and expedite those processes, make sure they're more streamlined, make sure that we have better and more industry baselines in terms of the requirements to submit these claims so they can be processed faster.
Okay, well, someone from the Richmond Fed told me once, watch us and make sure you let us know that we're watching you. So we are in this case, so thank you. Thanks to the three of you, really good hearing, really informative, great interest from this committee. Senators who wish to submit questions for their hearing record, we have notified them they're due 1 week from today, the 8th of February. To the witnesses, please submit responses to any and all those questions within 45 days from the day we get them to you. Thank you very much. Committee's adjourned.